Welcome back to Scholar Trading. Let's just post what's going on in NASDAQ and the markets as of Friday. So, as you've seen, my long-term markings, I haven't changed anything up. I just have a few extra indicators here. We need to take that off, take that off, take that off. Lots of indicators here, right? You guys can copy and paste as you like. I've done lessons on the majority of these. So, we'll lower down the RSI and the MACD. So here we are on the daily time frame. When I made this prediction over a month ago, this is where I believed everything was going to be dropping. So I had this red arrow made, and as you see, a little bit of volatility and slowly dropping down. I'm like, okay, yeah, it's looking pretty good, right? For dropping for the entire month, my prediction looks pretty solid. And then March came. Son of a bitch! That was unexpected. I did not think that it would come up to find its equal zone right here, but then it actually blasted through it. So now the concern is, how far up is it actually going to go before it pulls back down? Because, I mean, if you've seen what earnings season is going to look like in the next few weeks, it's going to be pretty rough. I don't want to give anything away. I don't want to sway you in any sort of direction. When I said here that I'm only going to be interested in oil plays, you know, this started going a little bit down. However, a lot of tech stocks still kept climbing. So where we're at in the market right now, I believe we are extremely overbought for a lot of the tech sector, especially if you take a look at the NASDAQ earning reports. The predictions anyway, not looking so great. Every single major stock, it looks like it's going to be earning less than it did last year. Now, that already indicates that the majority of the market will probably start going lower, but it all depends how low. Like, if earnings come in worse than projected, those stocks are going to tank. I believe that a lot of tech stocks are very overbought right now. Okay, so again, prediction happened here. We broke through that. However, it almost closed a previous gap that was formed way back in August of last year. Now, I say almost because, unfortunately, if I switch over to the 1 hour, this happened when the markets were closed. So I can't consider that. See, it came super close, but it was just when markets were already closed. For the 2-day gap from that previous close was shut down on April 4th. Let me just show you how this looks like on that final day. Okay, so we take our high, we take our low. I'll draw a very simple fib just on the day. Okay, there we are. It looks like we just projected off that 786. It's still sitting in the golden zone. Good possibility that it will go back down. Like, one of two things will happen. Either it will close this off and go back down, or just start dropping right now. Here's Apple. Apple, as you can see, if I extend these two, you could see right here just 2 weeks ago that it was incredibly, that's on the 1 hour, that it was incredibly overbought. However, now when we switch to the daily, every single time that it hops above this line, it drops hard, right? So you can see here a little bit of volatility going sideways. Here, it didn't actually do that. It just went sideways and dropped to the middle, right? And held, and still in overbought territory, right? So it pulled back a little bit and then really went up sharply. I don't think that we are in the zone right now for it to break through and make new highs. Like that's wishful thinking, especially when their earnings are predicted to come in significantly less than they did the same time last year. And as you can see, the previous estimate was 1.93 and they reported 1.88, so that's less than what they predicted already. And as we see earnings, I mean, earnings was significantly higher, so that's why reported revenue was way up there, even though it was lower than estimated, right? You can see 117 billion compared to its previous quarter of 90, and then the previous one of 82, and then 97, right? So if we're comparing apples to apples, this earning report in 28th of April is going to be this one right here, where it's going to come out the 4th of May. And as you can see, estimate earnings 1.42. That's not great. What happened right here in the same time frame at the end of April? 1.42, right? It came in a little bit better. However, what happened? It dropped hard. So what ended up happening? Earnings came in. Everybody was bullish for the day. It kind of sat around for the week in that zone. And then 2 weeks later, it went from a high of, well, let's go with the earnings high. It went from 163, and within 49 days, it dropped 20%. All right, so a month and a half. That's typically what? The midterm put cycle. So there's a lot of people that could have cleaned up right here on June 16th. And when was June 16th? Let's just take a quick look at the calendar. June 16th was a Thursday. Right here on the Thursday. Friday, it popped up a little bit. So as you can imagine, on Friday, puts expire. So do calls, right? But options expire on Fridays. So that is when it made its low. And then Friday, it bumped back up a little bit, but it was already done. The puts were sold, people made profit, and the stock started climbing. Anyway, folks, hope that helps. If you want me to dive into anything specific, just give me a shout out. I was just doing Apple as an example. Hope that helps, and I'll see you next time.
Thank you.